not really.
Just share it.
I can see your screen.
Okay, you can see.
I can see.
Okay.
Yep, I can see.
I've joined from Zoom, though.
Okay. 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 So actually we are running out of some time here. So let me quickly start the discussion and the agenda. What the entire discussion is all about. So although I was expecting at least 15 people, but there was some Zoom link. I think some people didn't get the updated notification about when I once I rescheduled the meeting. So let me quickly, I mean, who knows me very well. There are some other people, new people to me as well. So my name is Himanshu Tiwari, and I am working as a senior architect in one of the investment bank. I've been working. Now I'm completely running my own separate algo trading desk. I've been in investment banking since last 7, 8 years. I joined as a senior developer or lead in one of the investment banking as a my technical background, but I switched over to the trade world. Actually, it's a trading side of things with the business knowledge. And last 8 to 10 months, I completely. If you guys can't hear me or any interruption, just let me know in chat window. It is open. So yeah. So basically, I'm telling here what is all about algorithmic trading and what is the agenda of today's. It is very less time to discuss in entire algorithmic trading. There are various components which cover various areas, including the technology trading and the broker platforms, exchanges. So many things are involved in that aspect. So I'm just trying to cover basics of each of all of them. Uh, so I mean, as mostly you guys would be aware in terms of general investment goal in our life, complete lifespan, what the stages, various stages of investments we want to achieve or we achieved in our life. So the first, I will just quickly go through with these details because these are the very basic level of staging, and I will try to start algo part as quick as possible. So the first stage is like basic cash flow and basic needs. Everybody knows like first we need to after we once there's education, whatever engineering or MBA. So after that we just try to get a job where we can do some kind of cash flow to fulfill our basic needs. Some kind of based on our investment. Hello, sorry. Can you all hear me? If you-
Yeah, Himanshu, it's fine. I think
Yes,
go on.
yes.
okay.
No worry.
Okay. So this is the first stage where we try to get the I mean fulfill our basic needs based on our upbringings and lifestyle. Everybody has or their different kind of needs based on their environment. Then we move to the financial safety. Financial safety is like we our safety in terms of our safety, especially the markets like in terms of job markets where we don't know what kind of I mean, the risk would be there if we don't have job, for example, 3 months or 6 months. So we try to uh, create some kind of emergency fund, which could be used in any kind of emergency. Either it could be medical emergency or any job emergency. So that second stage, once we achieve in our lifetime, somewhere around 30s, and then we move to the when we fulfill all these two stages, then we move to the accumulating wealth. Now here the third stage is very important. When we start getting accumulation of some kind of fund with us, then we try to find out various investment goals, investment options with us. So there could be various investment options available in the market. Traditionally, there have been various investment options. So that third stage is very important because now here it comes to decide anything. Decide it is our choice to go what kind of investment we are going to do. Before this third stage, we don't have any choice. We didn't have any choice, like we have to do for basic needs, fulfill our basic needs. We need some kind of financial safety, and then we need to accumulate, start accumulation. After that, financial freedom and legacy, it's up to us what kind of how we will define what kind of financial freedom we need, where we can have long term perspective investment, business investment, and then legacy, which is kind of something like achieving benchmarking like millionaire, billionaire, something like that. So that is overall. I just quickly brief in because we might all of us have gone through these stages. So I'm not going basic details on that, but that's a basic about the financial planning. So I'm just going from the third stage where we have some kind of choice, what kind of investment options we have. So first of all, self-investment, which is very important. We have been doing. Everybody now these days started investing on themselves, getting lots of knowledge from different portals, books, whatever, to upgrade ourselves, to upgrade our skills, which is most required this competitive world. So that is the first option. Second option is like material investment, which is I'm talking. It's a real estate investment. Real estate investment has been there since long time, and especially in 2005. I mean, after 2003, 4 till the 11, 12. After that, the real estate market was in boom. Lots of people invested on that market. Uh, it is a good investment. It depends like what kind of market price you are getting on your state property and what kind of growth you are expecting from there. But there is a one problem with the real estate. This I mean this kind of investment doesn't provide your cash in liquid. I mean, for example, last year we have seen like lots of people lost their job due to the pandemic, and lots of things have been there. So people are not very confident. They didn't like much about real estate because you don't get the cash from your property very quickly, because that cash is not liquid enough. So that's availability of your cash is very very poor in that real estate investment. So these days people are trying to find more options really apart from the real estate. Another option is like direct business investment, where you are actually investing in a business. For example, directly investing the business, you are part of the business operations like manufacturing or any kind of I mean modeling. So you are actually involved, you are putting your energy, you are putting your fund on that, which is direct investment, and kind of angel investing as well. You can, if I mean, not all the people get opportunities to work on direct business investment. So that is another options you could think about. And another one is the indirect business investment, which is share market. Share market is a, again, it's a business investment. You are buying a share or number of share for a particular company, so that they can I mean they can scale their business whatever. For example, uh, till a certain level, for example, one company has, when Apple has started, they started from basic level. To get a certain level, they need more fund to scale their business across the globe. So they listed their business to the stock market through the various IPOs, exchanges, so that individual can invest on their business. So that is called indirect business investment. Apart from equities and share markets, there are other kind of business investment, especially in the stock market. They are not direct business investment, but they are derived from the underlying assets, underlying shares, like commodities, rates, and futures. And apart from that, forex investment is there. Forex is also one kind of investment, because lots of global trades are going. Companies are working globally across the world, so they some kind of transaction from one currency to another currency. So the value of the currency is defined from a standards, and other derived currency can be converted based on their conversion rate. So that is various kind of investment. So today we are just focusing on the goal about a stock market and investment. The Where I started my journey, because somebody asked me one question one day, like if you are willing to work for 30 years for your life to have X amount of capital that you can retire with, then why not spend 1 year to learn how to double it? So that is the question where I started my journey with investment banking, especially the trading side. Before that, I was in the technical part, how the system works, but not very interested on the trading side of, the business. But then I got opportunity with various kind of people in my company as well, and out of my organization as well. And then started learning about the stock market trading. Now, come to the stock market trading goals. They are completely two different kind of people, and based on their not risk appetite, there is their basic beliefs, what they expecting from stock market. One is long term investment and one is a short term investment. Both are good and both are not good based on their situation, market conditions. So if we are evaluating what kind of investment, so we can have certain kind of stocks that we believe that they are going to be consistent across the 5 years time or 6 years time. So we could have long term investment. So because on that investment we are going to hold the share for few years, basically 2 years, 3 years, 5 years, or 10 years. And the long term investment totally based on the fundamental analysis about the companies and their business. We need to understand what kind of business they are doing and what kind of performance they have been doing. Like for value investing is the kind of long-term investment which is based on fundamental analysis, where a company doesn't have so much assets, liquid and non-liquid, both the assets as of now, but they have a potential to grow exceptionally. So we can find out that opportunity on for long-term perspective. For short term, where we are focusing on the day trading. So that is all about algo trading, where we are going to focus on short term goals, where we are focusing on the technical analysis, not the fundamental analysis is like basic analysis we will do, but not more on that. But the focus on the technical analysis, where we are going to hold our fund for maximum for a day or few days. I mean, max to max up to certain weeks, which is called swing trading. Uh, so we will go one by one on that one. There is a one problem with the long-term benefit, as you guys have seen in last year what happened. People who were holding a big fund from till the 2020, somewhere around before, just before the pandemic, and the pandemic came and suddenly all the stock price went down. So most of the people lost their investment, complete investment. Uh, the reason behind that, for long term, those who are thinking about the long term perspective, there is a factor called drawdown factor, and they miss that opportunity. I will explain you what is drawdown factor is. For example, you have investment 10,000 pounds, and market went down. You lost 8,000 pounds. Now you have 2,000 pounds in your account. So it will not, the loss, it's you lost around 80% of your money. But to recover 80% money, you don't need 80%. So you need much more amount. There's a formula based on that. I will explain you later. Now this is again, now we are focused, our focus is on short term trading. Now short term trading, again, we are dividing in two parts: manual trading versus algorithmic trading. Manual trading, which has been there traditionally since the trading actually started when the first time the New York Stock Exchange was established, among few 5 to 10 people in a bar, and where they were drinking and they were discussing. So that was the first trading, official trading happened without any kind of listing. It has been there since long time, but algorithmic trading, that take the advantage of technology, where lots of brokerage companies and platforms, they have sophisticated infrastructure. They created multiple things on their system as well. So whatever the trading decision a person used to take individually, based on their feelings, whatever their understanding about the stock market, and they used to decide, Those all kind of things have been automated now. The problem with the manual trading is, if you see there are spikes in the chart I have shown. It's a general trading learning timeline. So when they started, there is a lots of greed. There's a lots of news like, oh, everybody can earn huge amount of money from stock market. Suddenly, amount will be double. So they will jump into the stock market without thinking about anything, without ignoring all kind of understanding, and they just, and initially they will get the profit as well. Everybody, there is a chances that they will get some kind of profit, and their account portfolio will getting improved. But when they start initially, and market is going to test, that is the I mean, if you longer period of time you would be there would be risk. So it's normally it goes test and you get lose some kind of amount. Again you invest some more amount to get to recover your loss, so that whatever your loss was there in the first downfall, you will try to recover on that. Initially you will recover some sort of amount, but again you will fall down. So that kind of learning take time, and 95% people lose their confidence on stock market trading once they got the second spikes down. When the second times their account completely vanished, they will leave the stock market trading. And market again will welcome new fresh blood of the traders, and they will it will for market will test them again. So it's difficult to follow that process, and it takes around 3 to 5 years to get if you are completely there in the market. Now, before going to the algo trading, I'm just uh, giving an image here so that it will help you to keep in mind. Uh, it is basic stock, which is TUI. It is UK stock. Where in the picture, if anybody knows, that's good. If people doesn't know, I can explain what is it all about. This is the candlestick chart pattern, which display the daily price for TUI stock, which is a traveling based company. In UK, and current stock price is, this is I capture I think last Friday, so that 395 pound 5 pound. It is £3 91 pence was the price. So once when people do the technical analysis, why I'm telling you this thing, because I want to little bit cover what is the technical analysis and what we try to achieve on that. So in technical analysis, uh, what is overall goal? I mean, we know the, if you buy a if particular share, either it's going to be upward or it's going to be downward. So if you think like the probability is like half, 50% chances are going to be up or 50% is going to be down. So winning and losing probability are half half. So basically, if we do the technical analysis, we'll try to find out the possibilities, right? Because apart from the external factors, any kind of news which affect the market, so we are ignoring that. We are just focusing if the news is normal or something doesn't change, I mean, exceptionally, then we will try to understand. So this, the technical base of the technical analysis is like the fundamental assumption is that the history will repeat itself. The whatever the pattern was there in the, for example, if you see in the this chart, it is going higher here, and then start it tries to repeat the similar kind of pattern, and we will find out, okay, it is repeating the similar pattern. Now price is going to be achieved this much amount, or it's going to be upward direction or downward direction. So the goal of technical analysis is to identify the trend, whether it's upward or it's downward or it's sideways. So basically three types of trends: upward trend or downward or sideways. If it is upward, we are going to buy. If it is downward, we are going to sell. And I mean, selling, if it is going downward, if I am saying selling, there is a concept called short selling, where people or investor or trader basically, they earn money from if falling market basically. So that is another way of mitigating the risk. So that kind of analysis we do in technical analysis part. Uh, there are various indicators, those who indicate uh, price movement or volume movement. Volume is important. How many shares are going to trade on the market? So that indicators gives us an idea. So I just give you basic about this kind of analysis. We get live market data and we apply those analytics and we get the result whether any kind of buying or selling signal is there or not. Either it could be pattern matching, either it could be a like a moving average or a Bollinger Band, any kind of indicators or strategy could be there. So just remember this chart, so that would be helpful further. Now coming to the basic system architecture about algo trading, what we do and what we achieve here. So first component is our trading system. Basically, three components are there, very high level. First component is our trading system. Second component is middle component is the brokers platform, and the third and last component of various exchanges who does control the transactions, market data, publishing, all kind of trade transactions, floor trading. I mean, normally what happen if you placing any kind of trade order through your system, it goes to the broker platform, and broker then route it to the various, exchanges, and then within the exchange, there are floor traders who actually place the orders. Now these days exchange also started implementing their I mean um, logic of maintaining the various kinds of order and places. So let's start one by one component. So first component is which is totally controlled by us, totally developed by us. It is a trade system. So it has two major component. One is algo engine and one another is the portfolio management. So algo engine basically where we have all kind of algorithms to identify various signals, various market opportunities from live market data. So if you see it goes to the market data from brokers platform, and broker actually get the market data from exchanges, various kind of exchanges, and it is very high speed because that market data could have slippages or I mean there are other things, various commissions also involved there. So whenever we are subscribing that live market data, we need to pay certain amount of money. So every exchange has their prices. London Stock Exchange, New York Stock Exchange, NSE, BSE, they all have charging different rates. And various kinds of market data as well, live market, L1 market data, L2 market data, depending upon your strategies. For example, some strategies are executing within a 5 seconds time lapse. So we need quick market data for that. So we are looking for L1 market data. Some strategies are like running in 5 minutes time lapse or 10 minutes time lapse. So we can work with L2 market data. So that is system, algo engine, and it has strategies. And another thing is that the portfolio management. This is basically once algo system generates the signals, whether buy or sell signals. Before placing the order, we need to there are various aspects of the system, like trade placement and risk management. Just to give me. So if anyone has any questions so far, they can just put their questions on the chat window. I can try to. Uh,
This Himanshu, this portfolio management that you have, right? This trades, risk, and performance.
yeah.
These are this is related to the person whose portfolio you are managing. Based on their profile, you configure this, is it?
Yeah, that's right. I mean, that entire portfolio is a portfolio for a particular account holder.
Yeah. So
Right.
no. So what I'm asking is trades, risk, and performance.
Yeah.
That will be specific to a portfolio holder, but algo engine is engines and strategies, those are also specific to a portfolio holder, or it's generic?
It is uh, configured in a way it is applicable for all the. I will come to that point. I will show you how does it work.
Okay.
The signals would be generated for, there are two ways. I mean, if for example one account is configured, the market data we need to get for individual account, right? If a particular account holder doesn't want to spend money on the market data, they can share their strategies which were already generated, right? If they want to pay for the market data, which is huge amount, I mean, then they need to get, they would be able to get the new strategies configurable, right? I'll explain you later when I will go exactly what the strategy is. And yes, that's right. I mean, the trades and risk performance, this mechanism is same for all the accounts, all the portfolios, right? We can configure it to for a specific need, but as of now, it is apply for all the portfolios.
Okay.
Okay, I'm just moving further. And so quickly, I will explain one thing I forget. I mean, about manual trading. The There is a harsh reality about manual trading is like 95% people lose their fund, lose their account completely. Only 5% traders are successful in the manual trading world, and it has been their history. Why it is there? The reason behind 90% is the manual trading. Psychology is the main factor which is uh, controlled the success or failure of manual trading. So I try to cover the few advantage of algo trading like scope. I said scope means when you are doing manual trading and you are looking various stock uh, shares, stock companies, market open at 8 o'clock, and you are just can manually you can't control various market area for multiple stocks like Apple, Google. Simultaneously, you cannot watch all the accounts, all the stocks, and try to find out the trading opportunities there. So it's very difficult. Hardly you can match if you are very expert, you are very fast. You can have two, three, up to max five stocks at the same time, and it is very risky to place orders on the five accounts simultaneously. So the scope will be bigger. We can scan across thousands uh, stock simultaneously within the few milliseconds, right? So the second point is speed, and the C, which is a minimum risk. Why minimum risk? Because there is a uh, uh, complete risk management is in place. I will come to this point. Minimum, what is the risk mitigation we are doing? And the most important thing is the point where we don't have emotional biases. You have various kind of emotional biases like loss abbreviation, adornment effect. So those are very, because of most of the trader, once you are in the trade in manual trading, once you are in the market, you purchase shares, you purchase some positions. It's very difficult to control them. It's very difficult for 95% people. It's very difficult. Only 5% people will become successful after certain losing certain amount of fund. Multiple times they will be losing, and then they will be able to control their emotions, which is very difficult. And again, high ability to back test and optimization. So once we develop any kind of a strategy which applicable for various market conditions, so we do the back testing. Back testing means based on the historical data, and then we do optimization on the performance, what kind of returns we would optimize from a particular strategy. And again, the time saving, it is very quick, fast, and few strategies has very you just need to spend around 3-4 hours every day, and you rest of the day would be free. So that kind of advantage we have, and definitely there are some disadvantage. One is that data fitting and over optimization. The market data we will be getting, so sometimes for example we are not getting any kind of market data for a particular stock, so that we need to do lots of many data correction on that. So it sometimes it happen like we don't get continuously for 1 minute. We don't get any kind of market data from the system, and we cannot claim for that from the broker application or from the exchanges that we didn't get the data. So we need to code something around that. So that is a problem. Over optimization, in theory we do lots of optimization in back testing. When we do optimization, it generates high amount of returns, but when we do the live trading, there's things, everything is changed. Trading is the modern portfolio theory is the biggest assumption is that whatever the uh, I mean returns we were getting the past, higher probability is that we will be getting the same returns in the future as well. That basic assumption is that. So that's why we do over optimization, and sometimes we fail on that. Other thing is bugs. There is very there is very less chance if you get a bug and it is sorted out, any kind of trade disconnectivity, internet disconnections, or any kind of bug. Sometime trade execution halted from the exchange side, and we if we are holding some kind of position, that could be the problem as well. So we need to optimize, or we need to find out a solution. Till a certain level we can mitigate that one as well. And the thing is, the last is the monitoring. Monitoring is not very easy, especially the live trading market. There are 99%, we can say, I cannot quantify it exactly, but we try as much as we can monitor this, the transactions, but sometimes it's unexpected is from exchanges or broker system, so it's controlled. There is a margin of error is very less on that. Now, so before getting the, we discussed the pros and cons about the algorithmic trading. I gave you the image of what kind of uh, system architecture we have. Now I'm more want to discuss about effective risk management, how we can mitigate from algorithmic trading. Definitely it's automatic. The average, all the systems are automatic. So there is minimum human interactions involved. So it is there. Now, coming to the risk management, effective risk management, there are two types of risk in the stock market trading. One is the systematic and unsystematic risk. Unsystematic risk, basically, if I say first is the systematic risk. Systematic is risk is which is across the market. Sometimes anything happen, like market is all the sectors, all the industries are down. For example, coronavirus. The pandemic we have seen, irrespective of all the industries, everything was down. So initially for a few first quarter or second quarter, uh, market was very high risk, and there was lots of volatility in the market. And that kind of risk, the problem with this kind of risk is this risk is undiversifiable, means we cannot mitigate this risk. And what maximum can we can do as a trader on that scenario, we can uh, beat the benchmark. Basically, beat the benchmark is like any kind of indexes. For example, Nifty index in India, Bank Nifty index in India, FTSE in London, or S&P 500 in US market. So that kind of indexes. So those are a group of companies basically. Those are showing what is the price of the index. So we can benchmark, okay, whatever is our strategy, we are trying to beat those indexes, and they are performing, not performing well or performing well. We are mm, beating them. Our strategical performance is better from the best investment options available in the market. For example, if say Nifty says, okay, or FTSE say I'm losing 500 pound a particular day, right? Because of some panic happen across all the sectors, all the markets. So our goal is not to give you some kind of profit or some kind of because wherever we are going to invest it's going to be loss. So our goal is to minimize that loss basically. And other way around, when this FTSE index is performing well, So if it is performing, for example, 500, if it is giving you 500 pound, our goal is to give it double to 1000 pound. So the target is to maximize the profit and minimize the risk. So this is like we try to mitigate, but it's very highly unlikely that we can mitigate systematic risk. The another risk is unsystematic risk, which is like we can diversify. It means, for example, a particular sector or a particular industry is not doing well, or particular company is not doing well. For example, there is some kind of news from higher management comes, and some kind of CEO level disruption happen, or some kind of which is not good for the company itself. So we can mitigate that kind of risk. For example, if I bought some kind of a stock from Capgemini, and suddenly something happened in Capgemini and the stock price goes down. So in that case, we can diversify our portfolio. So we can invest some other company which is competitive with Capgemini. So that way we can mitigate the risk or diversify. Another scenario is like where a particular industry is not doing. For example, automobile industry is not. So one and automobile industry is not doing well, but the retail industry is doing well. So we can pick up some stock from automobile and some from the retail. So we can mitigate that risk as well. So that kind of risk management we can achieve from algorithmic trading, and all these are automated. There is nothing manual on that. How we are going, I will try to explain one strategy, and then we can see. Now other thing is that money management. Now I touched this topic a little bit earlier. What is money management? So there is called drawdown factor. Drawdown factor is, I was giving an example where few people lost their entire amount or their fund when the initially couple of months within that pandemic start. So that is a simple formula. Uh, I can tell you the formula you can see here, which is uh, telling how much amount you need to uh, be in profit to cover your previous losses. For example, if you lost 20% of your fund value, so what you need to get to recover your loss, you need to earn 25%. Why? Because your initial, for example, your fund amount was 10,000. Now you lost 20% of that. You have 8,000. So from, and you lost 2,000 of amount. So from 8,000 to get the profit of 2,000, you need to get the return of 25%. So it seems very simple, but as the drawdown goes down, it's difficult to recover. For example, if you lost 50% of your fund, you need to recover, and then you need to recover 100% of amount. So what happened is when the pandemic starts, few people have a bigger portfolio. So for example, if they have 10,000 and they lost 5,000 of that, only 5,000 is left, and to recover that 50% of loss, they need to earn again 5,000 of that. But some people completely lost their account. So there should be minimum amount, there should be enough amount so that you can recover from your losses, and not on the recover from the losses in a timely manner. For example, you are holding since last 5 years, you did long term investment. Now you got somewhere around 300% of your portfolio return, and suddenly it's everything is gone. Even if you have certain amount fund, you can recover from it, but it will take another 3 to 4 years. So that kind of drawdown factor is there. So especially we should be careful about long-term investment, uh, about this one. Number second thing is the position sizing. Normally when we are doing manual trading, we can't think about how many shares should I buy. It's just random, whatever money we have available, and we cannot do all the calculation manually when we are doing this one. So number of positions, there is a rule. What is the loss per trade we can bear, and maximum loss per share. So per share means per position basically. So per trade means number of positions. So for example, we are buying 100 shares. So what kind of maximum loss per trade we can bear? in general rule is like we should have 2 to 5% depending upon portfolio. And in our strategy, we can change that. For example, your fund start from 10,000 and you got a value of 12,000. So you are having additional 2,000 to get more risk on that. So we can change the rate to get the more risk on that. So that kind of position sizing we can do. And uh, now lots of theory I told you. There is another model we do for, there is capital pricing illusion. Now I'm coming to the demonstration part, so which will give you an idea what exactly we do. Uh, just to give me a moment. Before moving to the demonstration, is there any question anybody has? Hello.
So Himanshu, the how do you pick the stocks that you invest in?
Yes, so I'm just giving starting very quickly how we are going to do that.
Okay.
Okay, so I'm just changing. So for example, I'm explaining here a strategy which is called opening gap strategy. And that gap strategy is basically what happened. Let me show you. Can you see the chart here, which I'm
Yeah.
showing the live? Yeah. So basically, every let me move. So this is the chart here where I'm trying to. So every day there is a price movement from opening position to closing position. So the end of the day, market close a particular price, and the next day there is an opening price. So for example, the last day is the 16th April, and the closing price is 395, 391.5. So next day, it means tomorrow morning, when the price will be open, it could be higher or it could be lower from previous closing price, right? So based on the gap, there is a strategy we can apply. If it is a gap is certain range, there are chances that market is going to reverse back. So there are, if you see that the targets we are here is the gap reversal strategy. So the opening price would be, if it is within the range of 2 to 8% chance, there are chances that this price is going to reverse and pick it up later. Okay, I can, if you want, I can explain you more in more details why it has happened, why this kind of strategy is there. Because there are some reasons behind that. Some logical modeling is there why the opening gap is higher and then it's going to reverse back in the range of 2 to 8%. If it is more than 10%, it's something is changed in those 2 days. Any big news is there, or any kind of worried, or any if it is going up more than 10%, it means any kind of good news came to the market during that weekend time, or it is going down more than 10%, if something weird happened during that time. So the goal is that if it is range of 2 to 8%, then it's going to be reversed, right? So and in this strategy, opening gap strategy, there are basically there are three process. It is true for in general. There are pre-trade processing, then trade execution, basically processing the trade, and there are post-trade execution. Post-trade, pre-trade execution is like there are some basic activities we need to perform every day. Actually, end of the every day market day. I can show you one Excel file where this Excel file is maintained on weekly basis. Initially, we have around 357 stocks. I mean, last week I traded on 350, around 350 trades basically. Simultaneously, at the same time and more with the morning opening price, we identify how many trades we can get from these 100 out of 350 trades. So what we are getting here, the pre-trade activities, for example, market is closing today and we are targeting to run the strategy tomorrow morning. So at the end of the day, we need to capture the closing price. Okay. So this activity either we can do at the end of the day or morning before opening the market, at least taking 1 hour gap so that we can prepare accordingly. So we need to capture this closing price. Uh, the last column you can see, this is the previous day closing price for each security, each share basically we are capturing here. And when the market will open, we will get the opening price, live opening price, and we will compare this previous closing price and the opening price, and we will identify the gap. And if this gap is within the 2 to 8% plus or minus both sides, it means it's going to be reversed. The chances are going to be reversed. It's not like that the strategy is always right. It could be wrong, but the moment is going to be wrong, we will exit the market immediately without thinking whether it's going to be up or down. If it is decision is wrong, then we need to leave the market. And if it is the decision is right, so we will trail the profit. So let me run a small program. I have recorded this. So here, I mean, can you see the screen?
Yeah.
Okay. So basically, uh, your previous question also here. In this example, we have two different portfolios. If you see the left portfolio and the right portfolio, and the right portfolio, in that case, only market data is coming for the right portfolio. We have subscribed and we paid the price for the right hand side portfolio. And this broker account is set up here, which is interactive broker. And we are targeting to place the orders, to place the trade orders for both the accounts simultaneously. And the strategy engine, basically, the algo engine will try to generate the signals, buying and or selling signals for both the portfolios. We could have multiple portfolios at the same time. In demonstration, I'm just showing the two portfolios. So that was the market data. Uh, that was the live. And if you see the right, left, bottom side of the both the portfolio, I mean both the account, that is the trade window where you can see the orders. And I have maximized the trade window where you can see the orders uh, placed during the market. And I'm just focusing on the live orders here. And this is the trading main account file, which actually what it does, it basically go to the main account, which is paid subscriber of the live market data. It will try to identify the signal opportunities for all the 350 records. And if any signal happen, any opportunity happen, it will just try to persist this that uh, uh, trade. And the another account will capture the system is designed like that. It will capture from the file that this phase is that signal is generated for a particular price for particular security. And the trading main account, it assumes like we already run the pre-trade activity where we got uh, closing price for last day for each security. Now we are able to compare the gap. So I've just executed again. Now, so to run all these accounts, we need to do various kinds of account configuration. so that it could be able to connect to our API gateway. If you remember the architecture, so there are various kinds of port configuration we need to do so we can communicate to live brokerage account. Okay. So here, if you see, I'm just so if you see this window, for the right hand side, the portfolio or account basically, we generated a signal. If you see the signal for the security, it is sell signal. I can't see the what is the security name. But you can see the main order is the sell order with the limit price of 16.28 uh, dollar, and then number of quantity we are targeting 891, right? And when we place this order, we need to apply all the risk calculation, like at what price we are going to. So this example is completely, this signal is completely short selling example where we are going to sell, and we are going to the expectation is there the market is going to down, and because the gap is up, so we are thinking gap is too much up and it's going to reverse, and that means market is going to be downside. And if market is going to be downward, then we are going to sell it. If we sell it, initially we will sell it at this price 16.28, and it will, when once it will go our price 16.03, then we will book our profit. It means we will got profit, we will get the profit. But other thing is that if market is going to upward, if market, we our expectation is like market is going to be reversed and we are going to book our profit. But in case if we are we are not true, then if market is going to upward, then we are again we need to buy those securities, and we are going to buy on 16.84, and that is going to be our stop loss. So that is the market live market trade we have done that. Before I just miss one another step, important step, the strategy configuration, which is more important. That kind of configuration we need to provide. The basic, there are few important configuration I am telling you. The execution duration. I mean, every strategy has some kind of timeline where we are going to execute. For example, this strategy was executed for 1 hour, morning 1 hour. Once the market opened, it was executed till 9 o'clock, because our thought is that whatever gap is going to be there, it's going to be closed very soon within 1 hour, and max to max 2 hours that we can also configure. So 3600 seconds basically, and the trade window buffer is 180 seconds. Last 180 seconds within that 1 hour, we are not going to place any new order. We are just going to be closing down, gracefully closing all the securities, all the positions, whatever we have placed till till now. And the other thing is candlestick length. Basically, at the we are our analytics applied for the 5 second market data. Each 5 second market, we can do more faster. Uh, Lots of investment banks, like high frequency trading firms, they process orders in bulk, millions of orders, and they perform within 1 second, or maybe some micro milliseconds or nanoseconds as well. So we are not doing as kind of high frequency trading as of now, but we are just focusing on the automation part. And the candlestick time window is 50 seconds, which means we are applying our analytics last 10 ticket, 10 candles basically. Each candle has 5 seconds. So basically last 50 seconds, whatever the market movement was there, based on that, we are identifying whether it's buy or sell, right? So to identify in last 50 seconds, whether it is trend is upward or trend is downward or it is sideways. So we will predict from the 50 seconds data. And the total fund, today we are targeting is, I mean, the strategy I targeted for 100,000 depending upon market risk. For example, if this week, uh, this weekend, any news comes, or at the end of the market data, any news comes, like for example, any cases increase, I mean, COVID cases increase, or any bigger movement or biggest movement from industry wise or happen. So the market risk is higher, then we will go with the less fund. It depends upon the situation. If it market is sentiments are very positive, then we will invest on more fund on that. That we will do weekly exercise basically. And normally we don't change this fund value within a week period time, but in case if any I mean big news comes over the market, then we change it. And maximum long trades basically, within the one strategy execution, how many buying trades we are going to place, maximum, that is 10. And maximum short trades, maximum how many selling orders we are going to place, 7. I mean, it depends, like we can make it configurable again, depending upon the market situation. If sentiments are positive, we know that market is going to be upward direction, so we will go for more buying trades rather than selling trades. But if it is market is downward, then we will go for more selling trades rather than buying trades. And the last and other one is the max ticker size. Max ticker size is like how many maximum stocks we are going to take for our investment today. In the Excel file, we can specify thousands of this security, but it's our choice how many we want to take it for today's trading execution. These are the basic configuration. Apart from that, we can do more and more configuration, but normally we don't change it. We just place for testing purpose or to optimization purpose. So this is the trading execution place, and this is place for main account, and this is the main. And if you see, just a minute, I think it is recorded video, so I need to, yes. In the right hand side of the bottom, if you see the sold 1012 SSP with the price of, so that is the notification I got from the trade workstation, which is broker platform. And on the left side, if you can see, this is the what kind of order it is placing. The market sentiments was the downward, so we got more short sell orders basically rather than the long trades. Just keep moving this one. So if you can see on the left hand side, the main account is applying the strategies, and the right hand side, this is uh, the account which is expecting the trade signal from the main account. Because if you see account number DUT 2602073, it doesn't have a paid subscription of the live market data, but the left hand side have the prescription of subscription of live market data. So it plays the signals generated, uh, and it is sharing the results of analytics to the this account, right hand side account, and it is placing the order. If you see there is an error, plays error while getting a real price, which is quite fair, because the moment we will get the trade signal file, it will start placing the order. And it is responsibility of main account to generate the signals and place it into the file system, and the child account or dependent account will keep, and it is very quickly, it is very fast, immediately within fractions of seconds it will just place the files, and it will just consume the same signal. Hello, sorry guys, I'm little bit, I will just quickly finish in next 5 minutes. I know we are a little bit running late. uh, is that fine with you guys?
Yeah.
Yes,
Oh.
Himanshu, go ahead.
Okay, okay. Yeah. So this this strategy, as you can see from the left hand side account with the portfolio and right hand account portfolio, the signals are created uh, for within a fractions of second, but the execution is totally depend on the market. We place the order. If you see the right hand side, the price, we created order 21.11 with a 1012 price, but we never guarantee the same price will be executed. That is called slippage. Actually, the moment we place the order and the price it is executed, and all the both the order, in the left hand side you can see the security. First signal security or security is SSP, and the second is KRO. Those are the share listed, and both the orders are bracket orders. Bracket orders means it always comes with a profit and a stop loss, profit taker and a stop loss, depend upon the market movement. So both will be keep open as it is. Any opportunity comes till the market for 1 hour time, and it will create, it will keep, and the same time it will also capturing all the events what we are getting here. I'm just showing you. It will create the all the capturing event for both the accounts separately. Uh, if you see the first one, it was executed 14th April 2047, which is US market time, and it says uh, it is trying to place order for 201 accounts, and since the starting it doesn't place any place order for that. So that kind of whatever trading happen, whatever accounts are placed, it will be keep will keep tracking of those accounts. And there is another log file which is this is the, and there is another account monitoring file basically that is separately. For example, there is a main trading session, something happen, it internet is goes down, and trading exchange is interrupted, or any problem happens, so suddenly there is another thread which is running, it will take control from the previous thread, which is called monitoring thread. So for example, let me explain what is this security means. So it will directly communicate with the trading platform through other through different internet connections basically. I'm using two connections. One is for Virgin Media and another one is for Vodafone. So trade processing is done through the Virgin Media, but monitoring is done through the Vodafone. Anything happen, any issue happen with the Virgin Media, so sudden automatically monitoring thread will be enabled, and it will directly capturing, and it anything goes wrong, it will close all the position immediately without taking any kind of profit or loss, right? So that is kind of control we have placed. So for example, this security STK, stock market VIH and US market, and its order is status is submitted, means order we have placed, position filled 0. I mean, for example, if we have targeted 100 shares, as of now 0 positions. I mean, if you see the target positions, we targeted 389, and out of 389, as of now there is no position filled, right? So because it's not necessary we will our trade would be executed onto the market, so we will keep waiting. How long will it take and to get the order filled? Uh, I think this is the just doing execution again. Yeah, in this here you can see Yeah, so here you can see logs for individual accounts separately has been created. So that is the main log file, and it will be keep updating continuously for next 1 hour. I mean until the time execution for a strategy is completed. So it will keep tracking what is going to be happening on the trade side and what is happening in the strategy side. And it will be keep refreshing all the. Trying to find the post trade section. uh, so basically what we are doing for the post trading, once all the trades are executed, we are creating the performance. I mean the how whatever number of trades we got executed, number of winning trades we got, number of losing trades we got, and what is the performance over batting average was, whether the percentage winning amount, percentage losing amount, whatever was there. And if we keep losing, I mean, it never happened. I mean, but in case if we continuously lose 3 trading sessions, we will stop the executing that strategy again, until and unless we do some kind of optimization on that to increase the performance, uh, or any kind of manipulation on the strategy. Because one once a strategy is I mean proved to be working efficiently for a particular market condition, it's not necessary it's going to be executed in a same way for all the market conditions. Something can change, something can be triggered for a particular strategy, and the idea is that if we continuously got 3 losing trades, we are going to stop execution for that particular strategy, and we need to optimize and change, and then effectively manage the strategies. So as of now, we have 2 strategies in production. One is opening gap, and another one is the pair trading strategy. So that I can demonstrate sometime later. I think I've covered the basic brief discussion about algorithmic trading, and uh, maybe in next I mean discussion I can capture more live session or more I mean sometimes during the market if we can think about that, so we can cover. I think for today's I'm done from my side. Any questions from you guys? Sorry to taking your time for weekend.
Yeah, hey, so I have one question. So you showed number of stocks, right? Around 300 or something.
Yeah.
So what are the which category these stocks falls? Large, mid, or small cap?
Yes. So yes, that's a good question. So as I said you, uh, these 350 stocks, we maintain this weekly list, right? Because let me go through. There is some basic items on this list. Is for example the closing price, the price average volume of the last 10 days, and the price of those stock market. So normally we don't invest on the penny stocks. We basically try to capture. There is a range for this strategy. We cover somewhere around $5 to $15 price range. That is the one area, and another one is the important thing is the average volume. A volume is also very important for us. If there is not necessary enough volume in the market, if we are targeting at least 100,000 shares to any number, millions or billions. We are targeting those kind of securities. The reason is that if we are placing the order, we need to get the enough buyers or traders at any place of the time, so that it doesn't should be happen like we place the order and it's not executed. So that is the second criteria. So that screening, basic screening, we have created through our trading tool. Basically, that is the trading view. We have created multiple, I mean, uh, uh, screens. Basically, if you can see the left side, there are OPG USA market and multiple OPG UK market. We have created screeners. Those screeners we use for weekly, creating that spreadsheet for weekly, and in a week's time we don't change this list, and for another week we try to find another uh, list of stocks. And another important thing is that column G, which is price increment with the value. Price increments, every trade has a different kind of minimum increment we need to provide. Then stop loss, take profit, whatever the stop loss we are triggering, and take profit. And then shortable. Shortable means whether we can sell the like, shares of particular security without buying it or not. So is that answer your question, or do you have anything else?
So, okay, so basically you said you're mainly targeting the stock in the range of 10 to $20 price, right?
Mostly, yeah, mostly we do that. Yeah, actually, it depends on the fund size. If we are investing with the $10,000, so we won't target 15 to 20. All right, then we will go at somewhere around 5 to 10. All
Mm-hmm.
right. So based on the fund size, so that is another piece of work. Like it is how many uh, funds we need to invest for each security. Then based on that, we can calculate. Yeah.
Mm. But no, so what is the reason for not going beyond that? Means normally the large cap growth company stock price are very high, right?
Yeah.
If you take
Yeah.
Apple, Microsoft, Amazon, those are very high. So you are not targeting those companies here?
See again, if we are targeting, if for example, if our fund is like how many position we will getting from Microsoft or Amazon or Apple kind of, because we are high cap companies, right? If we
Right.
are if we are buying for $10,000, how many? If I let me check what was the,
Yeah, it will be very less.
yeah,
Apple stock is $130,
uh, Apple is, what was the price? AAPL?
130.
Yeah, it's a $130 basically. So if you are
Hmm.
investing 10,000, and out
Hmm.
of 10,000 we are trying to find out 10 trades, minimum 10 trades, and
Hmm.
10,000, and out of 10 trade we will get £1,000, $1,000 allocated for Apple only. Okay,
Hmm.
so from $1,000, how many position we will be buying for Apple? It is, I think, less than 10.
Hmm.
Right. So in that case, we will don't won't go with that kind of investment.
Hmm.
Although, I mean, it depends on like the size of the fund. If you have investing like more funds and very secure, then we will do that. Otherwise, we normally go for the value investment or low mid cap of, or maybe sometimes penny stock. Depends on the market conditions. Yeah. And it's not like that we are completely avoiding those kind of Apple or other things,
Hmm.
right? The reason is that, as I said, for algo trading, we are not focusing on the company. We are not focusing on the fundamentals of company, whether some company is doing good or doing bad. It is like a long-term investment, something related with the long-term investment. For shorter period where we are holding for, if I go with for Apple for 2 hours time, I need to pay high commission for that, right? If I'm going to execute, get buying 10 trades for Apple, and it's going to be highly commission, brokers are going to be charged based on that company valuation point of view. But if I will
Hmm.
go for a small price or mid cap size, the commission would be very less. And for us, for short-term trading for 2 hours or 3 hours, I think we are more focused on to identify opportunities those are created with the gaps, not with the company fundamentals. Is it fine? Or
Mm-hmm. Yeah.
yeah, okay. Anything else, guys? Anyone has any question or doubt? We can have. Okay, so I think I have covered. I tried to cover various aspects of algorithmic trading, but it is very less time to uh, cover in details everything. But we will try to put something more on next time, and we'll see. There are various ways we can join each other in this. The main target was that either you have interest on trading or investing, or you have interest on IT side, or any kind of interest to join the algo trading. There are various scopes you can join. So I'll keep posting any kind of opportunities is there. So that would be really helpful for all of us. Thank you for patience and joining for today. I'm just anything you can reach out to me. Yeah.
Thank you, Maishu, for in-depth knowledge on what you're doing.
Thank you. Thank you. You bye.
Yeah, thanks,
Thank you.
Mahesh.
Bye.
Bye.
Bye.